this is the Chapter 4 demonstration. This does take quite a bit of time, so you might want to take a break a couple, 3 times in between the demo as we're going through, like maybe after we do step 1 and then maybe take a little break. We'll go on to step 2 and 3, maybe take a little break, and then we'll learn the financials, and then take a little break, and then we'll learn the adjust or closing entries. We'll post those and prepare the post-closing trial balance. So again, this is going to take a little bit of time, so you might want to break it up as we do go through. In Canvas, you will find the Chapter 4 demonstration papers, so make sure that you have printed those out and are ready to go through the demonstration. So the first thing that we're going to do is we're just going to kind of review the adjusting entries that we learned in Chapter 3, and then we're going to journalize those, and then we're going to prepare what we call a worksheet. So if you'll go over to your first page of journal entries, it'll say adjusting entries right up here at the top, and we'll go ahead and we're going to practice those again. Alright, so with the adjusting entries that we have for this demo, this is a company called Crush Demolition, and the end of their fiscal year is April 30th, and this is for 2015. There's some information that we'll use in just a little bit as we go through, so we'll come back to that part. So first we're going to go ahead and go through A through H, and we're going to journalize those, and then we're going to do the worksheet. So it'll be easier if we journalize and then go ahead and post those two, or go ahead and put them in the worksheet. So first one here, available supplies at the end of the fiscal year is 2015 had a cost of $7,900. So that's what's available when we counted all the inventory in our supply closet. So we are going to refer back to the worksheet, or we can look at the ledgers as well, and I'll show you the ledgers here. We have $16,000 in supplies. So that is what we started with our supplies, and we know that we have $7,900 left over. So if we take that balance of $16,000 and subtract $7,900, then we know that we used up during the year $8,100 in supplies. So what we'll do is we'll go ahead and journalize that. We're going to list all of these with our dates on them, and this is again going to be as of April 30th, so I'm going to put April 30th. And I'm also going to call this page 3. Normally our adjusting and closing entries will, once we journalize those, then they will be a page or so past our journal entry, so I'm going to just label this page 3 because we are going to post these. Okay, so with our supplies, if you remember, we use supplies expense and supplies. In our explanation, record supplies used. And again, we took that amount of $16,000 that was in the ledger, we subtracted what was left over of $7,900, and we have $8,100 left. So we're going to debit our supplies expense and subtract that with a credit from the supplies ledger. Okay, the second one is the cost of the expired insurance at the end of the fiscal year is $10,600. Now they gave us the cost of the expired, so that's what we're going to go ahead and use for that adjusting entry. So I'm going to skip a line and put the 30th, insurance expense, and prepaid insurance. And this is going to, explanation-wise, be record expired insurance. And again, with that, we're just going to use the amount that's listed on the front page. So we debit the expense, $10,600, and we credit the asset, $10,600. Now, if you remember back in Chapter 3, I said that some of your adjusting entries that you have to calculate out depreciation, others, the book gives you those numbers. So for this demo, our annual depreciation on the equipment is $7,000, so we're going to go ahead and use that amount. So again, we'll skip a line and put the 30th, put our depreciation expense, and again, this is for equipment. And then we use our accumulated depreciation, and that's equipment as well. And our explanation, record yearly depreciation. Record yearly depreciation. And again, we're going to go ahead and just use the amount that is listed, and so that's a debit to the expense, $7,000. And a credit to add to the accumulated for that asset, $7,000. Okay, now this is a little bit different adjusting entry. Now the April utilities expense of $800 is not included in the unadjusted trial balance because the bill arrived after the trial balance was prepared. So we need to record this. So we walked down to the mailbox and we got our electric bill. It's not due until the middle of May for April, but we want to include this in our April transactions to get that last little bit into our utilities expense. So we write up an adjusting entry and then we'll go ahead and pay it in the next month of May. Alright, so we're going to skip a line in and put the 30th. And then this is going to be utilities expense, because again we want to get that last little bit into our expense. And we're just going to put that to accounts payable. And then when we go to pay it, we'll take it out of the payable and credit the cash. I'm going to put here record April utilities. And the amount again for this is $800. We debit the expense. And we're going to credit that liability for the accounts payable. Alright, then for letter E, the company's employees have earned $2,000 of accrued wages at fiscal year end, so these are wages that have been earned but not yet paid, and so we're just going to go ahead and use that amount. We don't have to calculate like we did in Chapter 3. Alright, so we're going to go ahead and put the 30th for our date. This is going to be wages expense and wages payable. Remember that we want to get, again, that little bit left in our wages and then set it to the payable, and then when the employees get paid, we'll take it out of the payable and go ahead and pay our employees. Okay, so then I'm going to put for our explanation, record accrued wages. Again, wages that have been earned but not yet paid, so we're setting that aside. And we'll debit the expense $2,000 and credit the payable $2,000. Okay, letter F. The rent expense incurred and not yet paid or recorded at fiscal year end is $3,000. So with this, we're going to go ahead and record the remainder of the annual rent. So it's probably not due until the 1st, but this is the 30th, so we want to go ahead and get that last little bit of rent into that expense account. So we'll go ahead and record that as an adjusting entry. So again, skip a line and put the 30th. We're going to use rent expense and then rent payable. So again, we'll set that aside and pay it in a few days. And our explanation of this is to record April rent. And this is going to be $3,000 to the expense and $3,000 to the payable. And again, we'll set it aside and then pay it when we actually have to pay it. Okay, again, for the next one, this is a newer one. It's not one that we have probably seen before, but this is additional property taxes of $550 that has been assessed for the fiscal year, but has not been paid or recorded in the account. So what happens is that businesses pay property taxes just like homeowners do. And so probably what happened is maybe there was an improvement, or the assessor came around and looked at the property and reevaluated its value, and so it said that the company's gonna owe another $550 for the year. So with that, we are going to set that money aside along with the other money that we've already set aside for our property taxes. And usually we pay those in September, and then you have to pay those in February of the next year. So depending on what this one is for, then we'll set that money aside and then pay the bill when it actually comes. So to set aside the additional property taxes, again, we'll skip a line and put the 30th. And this is going to be property taxes expense. And again, we'll put that last little bit into the expense for the year, and property tax payable. Explanation, record additional taxes. And it's $550, so we will debit the expense and we will credit our payable. Whoops, $550. Alright, and then the last one, a long-term note payable bears the interest at 12% per month. The unadjusted interest expense account equals the amount paid for the first 11 months of 2015, which actually was $300 per month for the 11 months. So the part in the parentheses we'll talk about when we get to our balance sheet, but what we need to do here is just record April's interest expense on our note payable that we have, and you do this every month, make that adjusting entry. And so they gave us the amount, we don't have to calculate it out. So we'll go ahead and skip a line and put the 30th. Interest expense. And then interest payable. And explanation, record April's interest. I'll just put INT expense. Record April's interest expense. So we will debit the expense, again, get that last little bit on there, and then credit the payable. And then when we do have to pay back the loan, then the interest is all set aside, and we will pay that when that note does come due. Alright, so we have these all journalized, and I'm going to put letters by them here so that you know where they also correspond back to the front page of our demo. So I'm just going to label this letters A through H so that you have those there on the side. It's going to help us when we do this worksheet in just 1 second here. Alright. Now we're going to go ahead and prepare what we call a worksheet. Now some of you, if you took high school accounting, you might have learned the worksheet. And this is what the worksheet looks like here. So the worksheet does a couple of different things. First, it makes it so that we do not have to, after we journalize and post our regular transactions, we don't have to prepare an unadjusted trial balance. We put that on our worksheet. We put the ending balances in the debit or credit column, add them up, and make sure that they balance. If they don't balance, then we know that we made a mistake in our posting or journalizing, so we would need to go back and fix that. We're going to be learning adjustments in just a minute, and then this also takes so that we don't have to prepare an adjusted trial balance anymore, that these numbers are right here on our worksheet, so it takes away 2 of those other statements that we had to prepare before. And then the worksheet also is going to help the accountant tell if the company made money or lost money. So we do have something to balance our income statement too, so that we're not just double ruling it, not knowing what that is. The world does not have check figures, so you're not going to have a book that said that ABC company should have a net income of this for the year. This will help you in the real world with that income statement. So again, this is just a worksheet. It is just for the accountant. The owner of the company does not see this at all, but it does go in some of the working items for the business. Alright, so at the very top of our page, you'll see that there's a heading for the worksheet. And so what we do is we put the name of our company, and this is going to be crush, demolition, company, and then the word worksheet's already there. And then what we're going to do is we're going to put for year ended, and then this is going to be April 30th, and then 2015, because that's what our demo shows. And I know this is hard to see as we're going through. I'll move this over a little bit, but it's a little bit harder to see that because of that darker gray area. Alright, so all the accounts are already listed here that have ledgers, and you can compare this to the ledgers that we'll use in just a few minutes as we post. So we go from cash to utilities expense. They also have the account numbers to the ledgers here on the far left as well. Again, these are the ending balances from each of the ledgers after the regular transactions for the year have been posted. So what we're going to do is we're going to go ahead and take the adjustments that we just journalized, and we're going to put those into our worksheet. So we're going to start with our supplies expense and our supplies. So let's go down here to supplies expense. Down here, we're going to go over to the adjustments column. I'm going to put a letter A in the debit column and put 8,100. Then I'm going to go up to supplies, go to the credit, put letter A and 8,100. For the next one, letter B, insurance expense and prepaid insurance. So I'm going to go down here to our insurance expense, go over to our adjustments debit column, put a B and 10,600. And then I'm going to go up to our prepaid insurance credit column of the adjustments, letter B, 10,600. Our next adjustment was dealing with our depreciation expense and our accumulated, so we'll go ahead and put the 7,000 on our worksheet. We're going to go down here to our depreciation expense for equipment. Go to your debit column, put letter C and 7,000. And then we're going to go to our accumulated depreciation up here towards the top, fourth one down. Go over to the credit column, put a C and 7,000. So you should have 2 A's, 2 B's, and 2 C's, each one in the debit and then the credit column. So they should have partners there. Next one is utilities expense and accounts payable for that last minute electric bill that showed up. So we're going to go down here to utilities expense, go to your debit column, letter D and 800. And then we're going to go up to our accounts payable number 201 here. We're going to put letter D in the credit column and 800. Alright, then the next one is our wages expense and wages payable for 2,000. So we'll start down here with wages expense. That's account number 623. That's going to be a debit, letter E, and 2,000. And then we're going to go up to our wages payable. It's account number 210. Put that in the credit column, label it letter E, and 2,000. Alright, then we're going to go to our rent expense and our rent payable for 3,000. We're going to go down to rent expense, debit column, letter F, and again 3,000. You kind of have to write small. As you can see here, there's not a lot of extra space in the lines here. And then rent payable is number 208 right above letter E. We'll put letter F, and we have 3,000. Okay, then we have our next one was our property tax expense and our property tax payable. So we'll go to our property tax expense. So that's down here at account number 683. I kind of had to abbreviate that to fit it all in. Adjustments debit column, letter G, $550. And then our property tax payable, and that's going to be account number 213, credit column, label it letter G, and $550. Okay, then the last one is our interest expense and our interest payable for $300. So we're going to go down here to our interest expense, account number 633. Go over to the debit column of adjustments. Again, letter H and 300. And then we're going to go up to our interest payable, which is account number 203, right above letter F. And this is going to be letter H for $300. So again, double check that your adjustments column, you should have, let's see, 3, 4, 5, 6, 7, 8 on the debit or credit side, and then you should have 8 on the debit side as well. And make sure that the A equals the A, the B equals the B, and so on. Okay, when you're done with that, you're going to draw a line across your two adjustments columns, and you're going to add those up to make sure that they equal. And this adds up to be $32,350. So debit side, we're going to put $32,350. Credit side, $32,350. Our debits equal our credits, so we're going to go ahead and double rule that. And we balance at this point in time. Okay, now for the adjusted trial balance, again, we still need to make sure that our debits equal our credits, but what we need to do is we need to take the unadjusted balance, maybe add or subtract an adjustment, and then put it into our adjusted trial balance. Now, what you need to look at here is, like with the cash, we have a debit of $7,000, but there's nothing on those adjustment lines, so we're going to move that over to the debit column of the adjusted $7,000. Supplies has a $16,000 debit. We have an $8,100 credit that's going to subtract, and that should be a debit of $7,900. Prepaid insurance, $12,600. We have a credit of $10,600. So in our debit column, we put $2,000. For our equipment, $200,000. Nothing here in our adjustments column. So we're going to move that to our debit side of adjusted, $200,000. Make sure you get all 5 zeros there. Alright, now our accumulated depreciation, we're going to take the $14,000 credit and we're going to add the next year's accumulated depreciation. So we're going to add those two together. It goes in the credit side, and that's going to be $21,000. Accounts payable, we're going to add the two credits together. It goes on the credit side, $7,600. Now the interest, the rent, and the wages payable and the property tax payable does not have anything in the unadjusted, so we're going to use the adjustment, and we'll bring that over to our credit side of the adjusted trial balance. So we have a credit of $300, a credit of $3,000, a credit of $2,000, and a credit of $550. Now our long-term note payable is a credit of $30,000 here, so we're going to move that over to our adjusted. We don't have anything in our adjustments column, so $30,000 to the adjusted trial balance credit. Same with capital, there's nothing in the adjustments column, so credit side, $86,900. Now withdrawals, this goes back to the debit side, so it's a $12,000, no adjustment here. So we're going to put that in the adjusted trial balance debit column, $12,000. And then our revenue, which is demo fees earned, credit here, but we don't have anything in the adjustments column, so we'll move that over to our adjusted trial balance, and that's going to be $187,000. Alright, that's our last credit on the adjusted trial balance. All of our expenses will be on the debit side, okay? Now, again, your depreciation expense, there's nothing in the unadjusted balance here. So we're going to take the adjustment and move that over to our adjusted trial balance debit, $7,000. We do have wages for the year, $41,400. We're going to add the $2,000. So we're at $43,400. Add the interest expense and the adjustment together, debit, $3,600. Insurance expense, there's nothing in the unadjusted trial, so we'll go ahead and take the adjustment, put it in the adjusted trial balance debit, $10,600. For the next one, our rent expense plus another $3,000 for the adjustment, we're at $16,200, and that's going to be in our debit column as well. Supplies, there's nothing in the unadjusted trial balance, so we're going to take the debit, put it in our adjusted debit, $8,100. Now for the property tax, we're going to add the two debits together, and we're going to end up on the debit side, $10,250. Repairs, we don't have anything in our adjustment column, so we'll bring that to the adjusted trial balance, debit, $4,700. And then the last one is our utilities, $4,800 plus the $800 adjustment. We have our adjusted trial balance, debit, $5,600. Now the only one that usually causes students trouble is that withdrawal, because you get used to putting these credits in, and then all of a sudden we're going back to the debit. So do make sure your withdrawals are always on the debit side of the adjusted trial balance, then go back over for revenue on the credit side, and then all of your expenses have to be debits. Think of that normal balance side when we filled out our T account helper sheet in Chapter 2. Alright, we're going to add up the debit column, add up the credit column. We got to make sure that they equal out, so we'll draw our line across. One thing you don't want to do is get one column correctly added up, then add up the other one. You want to add them separately. Don't just get the first one and automatically put in the credit side, because it could be incorrect. Alright, so debit is 338,250. I'm sorry, 350. 338,350. And the credit side's the same, 338,350. So both of them equal out at 338,350. So we'll go ahead and double rule that. Alright, now think about what is on an income statement. An income statement is just revenue and just expenses. So what I want you to do is I want you to go over here to the left, and I want you to draw a line between 302 and 401. Just draw a line like this. And I want you to put an up arrow going towards the top. This is going to be balance sheet and owner's equity. So just put BS and OE for balance sheet and owner's equity. All of these accounts show up on one of those two statements. And then put a down arrow and put IS for income statement. So this is our revenue and expenses. That's what always shows up on an income statement. Now, when we move these over to the income statement column, we're going to move them over from the adjusted trial balance exactly as is. So our revenue account is going to go over on the credit side because it's a credit in the adjusted. So go to your income statement credit and put $187,000. And then the debits are all going to be those expenses. Nothing should be on the credit side for that income statement credit. So we'll start with our income statement debit, $7,000, then $43,400, $3,600 right below that. We're just going right down the column. $10,600, $16,200, $8,100, $10,250 debit to debit, $4,700, and $5,600. So again, I just took from the revenue through the expenses, moved the revenue to the credit, just brought all of the expenses to the debit side, and that's where those go. Income statement has revenue and expenses. Alright, draw a line across those two columns. We're going to add up the debit side, 109,450. Bring down the revenue, 187,000. Well, our debits and credits do not equal here, but this is the only time it is okay. Remember that revenue is what we take in, expenses are what we spent. So here our revenue is 187,000 and our debit is 109,450. That's what we spent. So revenue exceeds expenses. That means we made money. How much did we make? We're going to subtract these two, put it on the debit side, and then add these up to get these two balance out. So this company made $77,550. That goes on the debit side. Draw a line under the two columns. We're going to add them up. $187,000 for debit, $187,000 for the credit. Now they equal out. Okay, so we'll go ahead and double rule that. Now for the balance sheet and statement of owner's equity, we're going to use our other numbers, and again we'll use those right from the adjusted trial balance. Don't use the unadjusted because some of these have been adjusted with those adjustments. So always use your adjusted trial balance numbers for your income statement and balance sheet and owner's equity columns. Alright, let's start with the cash. Cash is a debit. We're going to move it over to the debit column. Supplies is a debit. Move it to the debit column. Prepaid insurance debit. That comes over to the debit column. And so does the equipment, $200,000. So the first four debits should be listed right from the adjusted trial balance. Now, if you can see here, we've got quite a few credits. Those are all going to get moved over to the credit side of this last column. So our accumulated depreciation is a credit of $21,000. Then we have our accounts payable, $7,600. $300 for the interest. $3,000 for the rent. $2,000 for wages, $550 for property tax payable, $30,000 for our long-term note payable. Don't forget all those zeros. Capital credit, $86,900. The last one is the withdrawals. Don't forget, you'll be off. That's $12,000 debit. So don't forget withdrawals or you're going to be off in your calculations. So again, we just took everything from cash to withdrawals, moved it over to our balance sheet and statement of owner's equity exactly as is. Going down to the bottom, we're going to draw a line across those two columns. We're going to add up the debit side, add up the credit side. The debit side equals 228,900, and our credit side is 151,350. So again, 228,900 for the debit, 151,350 for credit. Again, you can see that the debits do not equal the credits here, so we're going to subtract those and put the amount on the smaller side, and that's going to be 77,550. This side, subtracting the numbers, has to equal the income statement. Subtracting the numbers, these two numbers have to be the same. If they're not, you did something wrong. Draw your line across your last two columns there, and our first column is 228,900. We add the two figures together, we get 228,900. We'll go ahead and double rule, and that is shows it balances then. The last thing we have to do here is we have to go to the line all the way to the left that our net income is on and label that. So right underneath the word totals here, write net income, and that will tell the accountant again that there was a profit for the company. Another way you can tell that this was a net income is if these last four columns make a circle. Now if you had a loss, you would have the difference in the credit column of income statement and the balance sheet owner's equity column of debit. So if it's a loss, those differences are going in the middle. If it's a profit, it's going to make a big circle here. I did have a student way back when that's family owned a donut shop, and he said, oh, that makes a donut. So if you want to think in terms of food, it makes a donut or a circle. Alright, so that is our worksheet, and again, this is a very helpful tool. Again, it takes away you having to write out the unadjusted trial balance and the adjusted trial balance, and then it does give us the tool to help with our financials as we go through, which we'll use this in just a few minutes to prepare our financial statements. Okay, now the other big task that we have is we have to post our adjusting entries. Now, again, remember that posting is this love-hate relationship, and we're going to post to our ledgers. and we're going to go back and forth, journal, ledger, journal, ledger, journal, ledger. It's up to you if you want to, tear apart your ledgers. That's up to you. We are going to use them again when we're done with this part. So if you want to tear them apart, that's totally up to you. I'll set that aside. Okay, so let's go ahead and start. We'll go line by line with our supplies expense and our supplies. We'll start with supplies expense. If you flip over to the last page of ledgers, interest expense is at the top, supplies is at the bottom. We're going to put in our date, April, APR, and then 30. Remember, nothing goes in the item column. For all of our expenses, we add on debit, subtract on credit, keep our balance on the debit side. And we're going to post an $8,100 debit, and that is our new balance on the debit side. Remember, I labeled this page 3 before, so we're going to put post reference 3 and then account number 652 next to our supplies expense. We're going to supplies next, an $8,100 credit. Supplies is on the very first page of your ledgers. You don't have to write April again, just go ahead and put the 30th. Supplies, we add on debit, subtract on credit, and keep that balance on the debit side. We're going to post an $8,100 credit. We subtract that from our debit, and that gives us $7,900. That should match your worksheet, because that's our ending balance, and that's what we end up with in our adjusted trial balance for that amount, $7,900. So again, you want to make sure that those are the same. Okay, page 3, post reference 3, and then account number 126. Okay, insurance expense. That's our next one. So insurance expense is on that same page with interest at the top. Insurance is below that. We need to put in April 30th. We add on debit, subtract on credit, keep our balance on the debit side. We're going to post a $10,600 debit, and that's our debit balance as well. Post reference 3, and then we're going to put account number 637 on our journal. Okay, prepaid insurance is next, and that is on the same page with our supplies right below. We're just going to put the 30th in our date column. We add on debit, subtract on credit, keep our balance on the debit side. We're going to post a $10,600 credit. We're going to subtract these two, the debit larger than the credit, so the balance stays on the debit side, and that's going to end up being $2,000. Again, that should match your worksheet when you're finished. Post reference 3 and account number 128 next to prepaid insurance. Okay, going to our depreciation expense for our equipment. Now your depreciation expense, drawings at the top, then our revenue account. Here's our depreciation. April 30th date. Add on debit, subtract on credit, keep your balance on the debit side. We're going to post a $7,000 debit, and that's our new debit balance. Post reference 3 and account number 612 back on the journal. Alright, accumulated depreciation. We're going to find that account. Our accumulated depreciation cash, and then flip that over. It's at the top of the next page there. Put the 30th as your date. No need to write April again. Now remember, with accumulated depreciation, we subtract on debit, add on credit, keep our balance on the credit side. This $14,000 represents how much depreciation has been accumulated since that asset has been purchased. We're going to post a credit of $7,000, add the two together, and we get a credit of $21,000. Post reference 3 and account number 168 on the journal. Okay, utilities expense. We're going to post an $800 debit, get that last bit of utilities. Last page, property taxes at the top up here, and then we have utilities on the third one. 30th for your date. Add on debit, subtract on credit, keep the balance on the debit side. We're going to add another $800 debit. We're going to put that with the balance that we have. We're at $5,600. Post reference is 3, and account number 690 next to the expense. Okay, accounts payable. That's going to be on the back of our cash, right underneath our accumulated depreciation is accounts payable. 30th in your date column. Liability. Subtract on debit, add on credit, keep our balance on the credit side. We're going to post an $800 credit. Add the two together here, we get $7,600. Post reference is 3, and account number 201 on our journal. Okay, wages expense is next. We're going to post a $2,000 debit. Wages expense is drawings at the top. It's the last one on that page. 30th in your date column. Add on debit, subtract on credit, keep your balance on the debit side. We're going to post $2,000, that last little bit of wages for the year. Add that to our balance. We get $43,400. Remember, this is one of the largest expenses for our company is paying our people. Post reference 3 and account number 623 next to wages. All right, wages payable. Our liability, wages payable. That is, if you flip that page over, wages payable is at the top. We haven't used this ledger yet, so we have to put in our April 30th date. Subtract debit, add credit, keep the balance on the credit side. We're going to post a $2,000 credit, and that is our balance in wages payable. Post reference 3 and account number 210 right below. Alright, we're halfway done. We got 6 more to go here. Alright, rent expense. Interest is at the top, rent is towards the bottom. Put the 30th in your date column. Add on debit, subtract on credit, keep your balance on the debit side. We're going to post a $3,000 debit. Add it to what's already in the account. We're at $16,200. Post reference 3 and account number 640 next to rent. Alright, rent payable, another liability. That's accumulated at the top, rent payables at the bottom. We haven't used this one, so we need to put in our April 30th date. Subtract on debit, add on credit, balance goes on the credit side. We're going to post a $3,000 credit, and that is our new credit balance. Post reference is 3 and account number 208 back on the journal. Okay, property tax expense. Here's our property tax expense on, again, that last page, but up at the top of the ledgers. 30th in your date column. Add on debit, subtract on credit, keep your balance on the debit side. We're going to post a $550 debit. $550 debit. That's going to give us a new balance of $10,250 on the debit side. Remember to use your calculator if you need to, or fingers and toes. Post reference is 3 and account number 683 on the journal. Okay, property tax payable, liability here. That's right underneath our wages payable. So here's our property tax payable. We need to put in the date of April 30th. Subtract on debit, add on credit, keep the balance on the credit side. $550 in the credit column, and that's our new balance as well. Post reference is 3, and account number 213 on the journal. All right, 2 more to go. Interest expense. Interest expense is going to be at the very top of the 3rd page of ledgers. Put in the 30th for your dates. Add on debit, subtract on credit. Keep the balance on the debit side. $300 debit added to what we've already set aside for, or paid out for interest for the year, sorry. So that's $3,600. Post reference is 3. And account number 633 on the journal. Last one is interest payable. Last one is interest payable. That is going to be right underneath accounts payable, accumulated at the top. April 30th date, we haven't used this ledger yet. Subtract on debit, add on credit, keep the balance on the credit side. And our last posting, we have a $300 credit, and that's our balance as well. Post reference 3 and account number 203. So again, you want to make sure you have post reference numbers in all of your journal post reference column. In all of your ledgers, you want to make sure you have post references and dates. Make sure you posted the amount from the journal and you're keeping a running total when you post after each individual posting. Don't just say, I got 21,000. Make sure you indicate that, especially when we're posting with our cash as well. Okay, so that is our adjusting entries that we posted. We prepared our worksheet. So, so what we've done so far, we got step 1 done, we got step 2, we got step 3. We're going to go ahead and look at our income statement, our statement of owner's equity, and then we're going to switch up our balance sheet a little bit here. Okay, so what you're going to want to do is find your page, or I think I'll just have you look at these to save a little bit of handwriting time. With our income statement, that doesn't change, but I do want to, I'll show you what that looks like here. So this is the income statement for Crush Demolition Company, and we have our demo fees of $187,000, and then we have all of our expenses. Total expenses $109,450. Revenue minus expenses $77,550. Now remember that is what we did on our worksheet. So when you go to prepare the income statement, what you're going to do is look at your worksheet. Use your numbers from the income statement columns of the worksheet. Here's the revenue, here's the expenses. Double check your total, $109,450. And then when you take the revenue minus the expenses, you do get $77,550. So that's what you can do to double check. If this number doesn't match your worksheet, go back and double check that you didn't copy a number down incorrectly from the worksheet to the income statement. Double check your math and so on. Double rule, make sure you do double rule that. Okay, now for the statement of owner's equity, we're going to use our balance sheet owner's equity columns. So, name of the company, statement of owner's equity for year-ended date. We start out with J Bond, that's our owner, capital, $46,900. Now, those numbers came from up here on our instructions on the first page. So we got $46,900 is the owner's capital at the end of 14. There's a $40,000 investment, so we need that as well. Investment by owner, net income from our income statement, withdrawals, $12,000, and then we get a new capital as of April 30th of 2015 of $152,450. So that's what our statement of owner's equity is going to look like for our Crush Demolition. Okay, Now the balance sheet. Our balance sheet is going to change a little bit here. So if you will go to the balance sheet page. Okay, so what we're going to do is we're going to start what we call a classified balance sheet. The title does not change. It's still a balance sheet, so I don't want you to write classified up here. It's just balance sheet, but the format of it is going to change. So what we're going to do again is we're going to use our worksheet. So we will use the numbers from our worksheet here. We'll use the profit and so on. And we'll, use our numbers from our statement of owner's equity, but again, that's all going to be figured into that. And again, we'll use these numbers from the worksheet. Now, for the balance sheet, let's go ahead and put our title up here at the top. Crush, demolition, I spelled that wrong. ITION company. And then we're going to put April 30th in 2015. So we're just going to use that for year ended dates. So just the specific date for that, April 30th, 2015. Alright, we're going to start this out the same way we did before. Now the columns are on here, so if you're somebody who likes your columns, you can take a ruler and draw your straight lines through for your columns. I know a lot of you like to have things nice and neat, but this page doesn't have columns on it. Alright, kind of over to the left, but in the middle put assets. And then what we're going to do is over to the left write current assets. Now, the current assets section of our balance sheet is going to be for those assets that we could sell or get rid of within 90 days or less. So it's going to be our cash. It's going to be our supplies. We can sell those or return those back to who we bought them from. And it's going to be the prepaid insurance because we could cancel the policy and get back whatever we have coming. So that's going to be our current assets. This would also include prepaid rents and accounts receivable, so those are going to be there as well. So anything that we could sell or get rid of within 90 days or less. Alright, so indent a little bit, put cash, supplies, and prepaid insurance. So again, remember that these are assets that we can sell or get rid of within 90 days or less, and this would also include accounts receivable and prepaid rent. Underneath prepaid, write total current assets. From your worksheet, we'll take the numbers right from the owner's equity balance sheet columns of the worksheet. So I'm going to take those right from over this area here. So kind of towards the middle, we're going to put our $7,000 cash, supplies is $7,900, and $2,000 for prepaid insurance. Draw a line under the $2,000. We're going to add those three together and put it over towards the right side, $16,900. Now, the next section over to the left is called plant assets. Now, these are not bushes and trees, flowers, things like that. These are assets that are more big assets that are going to take longer than 90 days to sell. In this case, we have equipment, but it could be building, vehicles, machinery, anything like that, okay? So, any of our bigger assets that would take longer to sell. So under plant assets, we have equipment. Remember, you're spelling everything out. And then we have our accumulated depreciation. And I'm just going to put -EQUIP because I want to have enough room for the numbers here. Alright, so what we're going to do here is we're going to take from our Worksheet, balance sheet columns, we're going to take the amount of our equipment, $200,000, and then the total accumulated depreciation of $21,000. So I'm going to put in the middle here $200,000 for the equipment and $21,000 for the accumulated depreciation. We're going to subtract those two, so draw a line under the $21,000, bring it over to the far right side, and that's $179,000. Underneath accumulated, go back to the left and write total assets. We're going to add our two numbers together here, and we get $195,900, $195,900. So again, you can see that our assets are still assets, or things that we own. We've just put them into categories to current and plant. Again, plant is going to be those assets that are going to take longer to sell, buildings, equipment, vehicles, things like that. Current assets are going to be our cash, our supplies, our prepaid insurance, prepaid rent, and also accounts receivable. Now, you can skip a line, and we're going to center liabilities. We're going to do the same thing with the liabilities that we did with the assets. We're going to start with our current liabilities. And again, these are going to be those those liabilities that we could pay off in 90 days or less. So what we'll do is we'll look at our worksheet here. We have accounts payable, interest payable, rent, wages, and property tax payable. So those are just our regular liabilities. Unearned revenue would go in here as well. Anything more long-term, it'll say with that, that's going to go in a different section. So in this case, we just have accounts payable, interest, rent, wages, and property tax. We're going to take the numbers from the balance sheet columns of the worksheet over here, but let's get the titles written first. Spell out, we have accounts payable, no abbreviating except for maybe that depreciation. Interest payable, rent payable, wages payable, property tax payable. Oops. Okay, now back in our instructions for letter H, adjustment, note that the company is required to make a $10,000 payment towards the note payable during the 2016 fiscal year. So in our upcoming year, we do have to make a $10,000 payment towards our long-term note payable. So that needs to go into our current liabilities section. So we're going to list here current portion, and I'm just going to put LT and then note PAY. So current portion of the long-term note payable. Again, you'll have to read your instructions to see if you have that in your problems or exercises as you're going through, but you want to make sure that if it is in the instructions that you do include that here. Alright, we'll make a center column, and again we're going to use our numbers from over here. Alright, so our accounts payable is $7,600. Interest payable is $300. $3,000 for rent. $2,000 for wages. $550 for property tax, and then that current portion, which is $10,000. We're going to draw a line under the $10,000. Add those together. We get $23,450. We're going to label this total current liabilities. Liabilities that we could pay off in 90 days or less. Okay, now we have long-term liabilities. That's our next title here. Long-term liabilities. And underneath that indent, we're going to put our long-term note payable. And then underneath, I'm going to put a parenthesis, less current portion. And what we will do here is we'll take the amount of our long-term note payable, which is $30,000, and I'll put the math here. You don't have to do this in your homework. Minus the $10,000 that we have to pay, and that's going to give us $20,000 for our long-term note payable for the upcoming year. So again, that is off the worksheet. So here's our long-term note payable less the current portion, and that gives us $20,000 here. Draw a line under the $20,000. We're going to add the current and the long-term together. We get $43,450, and we will label this total liabilities. Total liabilities. So current liabilities, 90 days or less, that we can pay those off. Long-term are going to take longer. It might be a 30-year mortgage. It could be, a 10-year loan, something like that. Okay. Last section is our equity. This stays exactly the same as it did before. We put the name of our owner, J. Bond, comma capital. From our statement of owner's equity, we'll go ahead and take that ending number that we got here, $152,450. Draw a line underneath, and we will add that to our total liabilities, and that gives us $195,900. We're going to label this to the left, total liabilities and equity. $195,900 equals our assets of $195,900, so our assets equal our liabilities plus equity, so our balance sheet works perfectly. Now, with this, again, we did not change the name. It's still the balance sheet. It's just classified as the way that we format the balance sheet. So we have our asset section with current and plant, our liabilities section with current and long-term liabilities, and then we have our regular equity section as well. So again, we just changed the formatting of it. We did not change the name. So you're always going to want to look at your instructions, and you're going to want to make sure that you see that. So it says right here, income statement, statement of owner's equity, and classified balance sheet. Okay? Alright, so that's that part. Alright, next, the next part of this, I wanted to show you this too. I forgot. In your textbook on page 128, and I'm guessing it's right after the beginning part of chapter 1 in the ebook as well, but here's an example of what a worksheet looks like. So you'll see it looks just like what we did, it's just in color, and it does tell you that unadjusted, adjustments, adjusted trial balance, income statement columns, and then balance sheet and owner's equity columns. And then it shows you, once you add those up, figuring out your net income, and then adding up your column totals. Again, 128 in the 3-ring binder, loose leaf version, or it is in the ebook as well. Probably under the first section, I'm guessing. Okay, now for the next part, we're going, I know we just, opened up our company in chapter 1 and chapter 2. And then chapter 3, we learned adjusting entries to get ready for the end of our year. Well, now we're going to close out our year. We're going to get ready for our next fiscal year. So what we're going to learn next is what we call closing entries. Now, closing entries, you have a journal page for that. It says right up at the top here, closing entries. What closing entries does is it closes out the temporary accounts. So Those are accounts that we only use for the fiscal year, and then we zero them out, and then we use them again for the next year. Permanent accounts like our liabilities, our assets, and our capital and capital accounts, those are going to be what we call permanent accounts. They stay open. But drawing, revenue, and expenses are all going to close because we don't want to combine this year's revenue with next year's revenue. We don't want to combine this year's expenses with next year's expenses. Or drawing. We don't want to combine this year's drawing with next year's drawing. So we want to keep those separate from year to year, but our assets will keep going as we keep our business flowing. Now, for closing entries, this is the format you have to use. They do have to go in this order. So we will start with our April 30th date. Remember, April only has 30 days in it. Closing entries. The first thing we're going to do is close out revenue. Now, our revenue is a credit. So to close that out, we're going to put it on the debit side of our journal. And we're going to label this. I'm just going to put demo fees earned because this is a journal and we can abbreviate that. So that closes out our revenue account. But we can't just leave this as a debit without a credit partner. So our credit for $187,000, we're going to use a new account which we call income summary. And this is only used for closing entries. This is the only thing we use it for. We use it, we close it, and then that's the end of that. So with our closing entries, again for revenue, we start with our revenue account. We debit that because that is the opposite of the normal balance side. And then income summary helps us balance out our debits and credits. Explanation, close, revenue. We'll just put ACT for account. So that's our first closing entry. Skip a line. Our next closing entry is going to close out all of our expenses. All of our expenses are debits. So to close them out, we have to list them as credits. So go ahead and skip a line and put the 30th. I'm going to have you skip this first line here, and we're going to list all of our expenses right below. Again, take them off your worksheet. Remember, your demo is just a guide, but when you go to use or close out the closing entries using the expense accounts, look at the information that you are given. Okay, so let's start with our first account. Again, note right on that first line, skip one. Depreciation expense. We'll just put equip. Wages expense. Interest expense. Insurance expense. Rent expense. Supplies expense. This should go right down your worksheet. Property tax expense. Repairs expense. And then utilities expense. So those are all normal debit balance accounts. So in order to close these out, we're going to list them as credits. So our expenses are going to go on the credit side. Depreciation, $7,000. $43,400 for wages, all debits, all credits. $3,600 interest. $10,600 insurance. $16,200 for rent. $8,100 for supplies. $10,250 for property tax. $4,700 for repairs, and $5,600 for utilities expense. Now with this, we're going to add up all of the credits and we're going to put the total on the debit side. So once we add those up, we get 109,450. 109,450. Now the title that we're going to use for this to help balance out the debits and credits is just like what we did above, and that's going to be income summary. So you just add up all of the credits, and that's going to be your total here. It should equal your worksheet. Right here, 109,450 should equal your worksheet. Explanation, close, expense, accounts. Close expense accounts. Alright, now our third closing entry is going to close that income summary account, and it's also going to post our profit to our owner, because the whole reason of being in business is to make money. So that's what we're going to do with this. We want to post the profit to the owner's account. Put the 30th as your date. We're going to list income summary first. We're going to list on the second line J bond, comma capital. And our explanation here, close income summary. So like I mentioned before, we only use the income summary for the closing entries. We just use it, and then it should never have a balance in it after we're all said and done. Now, what we're going to do here, we are not going to use the capital number here. We are going to use our net income. If we use the $86,900 and we're close out capital, we might as well go out of business, because that's what you're doing when you close out capital. You're closing up shop. You're only going to post the profit to the owner's capital account. To do that, we list it as a credit, $77,550. The debit, to help everything balance out, goes to income summary, $77,550. When we post, you'll see that will close out. Now, let's say you weren't given this number. You weren't given the profit or the loss, and you will see this in some of your problems. How do we calculate that out? Revenue minus expenses. Revenue minus expenses. So again, if you're not given the profit or the loss, revenue minus expenses. Do not use capital, because if you use the capital balance, we're assuming that we're going out of business, and we don't want to go out of business. We just want to post the profit to the owner's capital account. Alright, our last closing entry is going to close our withdrawals. Our withdrawals account, if you remember, is normally a debit account, so we want to close that with a credit. And we're going to take this away from the capital, because this is the owner's withdrawals. Put the 30th, J bond, comma capital, J bond, comma drawing or withdrawals, whichever you want to put. Again, to close out the withdrawal account, that's a credit for $12,000 opposite its normal balance side, and then we will subtract the same amount from capital when we post. $12,000. Explanation, close withdrawal or drawing account. Alright, so we have in our closing entries, we close the revenue. Put an R over here on the left. We close the expenses. Put an E over here on the left. We close the income summary. Put an I over on the left. And we close drawing. Put a D over here on the left. R-E-I-D, revenue, expenses, income summary, drawing. This is the order that they have to go in for closing entries. You'll notice that there isn't any assets, liabilities on here at all. And we do a couple postings of capital, but it does not close out. Those are the permanent accounts. Revenue, expenses, income summary, and drawing, those are temporary accounts. Again, I'm going to write a note over here that this is our net income. So that's what you want to have for this entry here. If you're not given that number, revenue minus expenses. Okay? Alright, and then now what we're going to do is we're going to post all of these to our ledgers. We're getting to the almost end. We're getting to the almost end here. So get your ledgers back out again, and we're going to post line by line to these. All right, find your revenue account, our demo fees earned. Here's our revenue account here. We're going to put the 30th. We subtract on debit, add on credit. Balance goes on the credit side. We're going to post $187,000 debit. Put that in your first debit column. The credit and the debit are exactly the same. Our balance is 0. You can put a 0, or you can just put a line through. That's a lot faster, whichever you prefer to do. I forgot, we usually put our closing entries after adjusting entries, so this is going to be page 4. And then I'll put this as post reference 4 and account number 401 next to our demo fees. Okay, next one is income summary. Now, income summary, we don't have a ledger for it, so we need to open one up here. So that's after utilities expense. And we're going to give this account number 901. And we're going to label this income summary. So we'll label that income summary. We need to put in our April 30th date. Now, income summary does not have a normal balance side, so we just post as is. So what we're going to do here is we're going to post a debit first of $109,450. So we're going to post a $109,450. Bring that over to the debit side, $109,450. Post reference is 4. And we're going to put account number 901 next to income summary. Okay, now for the next part here, we're going to go back to our income summary. Oh, I posted the wrong amount. We need to erase, sorry. So, we're going to erase this. I got one step ahead of myself. Sorry. Okay, so we're going to go back to income summary. We're going to put a credit of $187,000. Move that over to the credit column. Sorry about that. Okay, so we got that one done. Now, next one we're going to post a debit of $109,450. $109,450. So, 30th in your date column. Again, nothing in your item column. We're going to put $109,450. The credit is larger than the debit, so we're going to subtract those two. And then we're going to put it on the credit side because the credit balance is larger. We get $77,550. Post reference 4. And then we're going to put account number 901 next to income summary. Okay, now we need to go to our depreciation expense. That's our next posting here. We're going to post a credit of $7,000. 30th in your date column. On an expense, we've not done this before. We're going to put in the credit column $7,000. Debit and credit cancel each other out. You can put 0 or a line, but just make sure it is on that normal balance side. Post reference is 4. And account number 612 next to depreciation. Wages expense is next. 30th in your date column. We're going to post a $2,000 credit. I'm goofing up. Sorry. $43,400 credit. And that zeroes out as well. Debit and credit are the same, zeroes out. Post reference 4. And account number 623 next to wages. Okay, interest expense, that's our next one here. Interest expense, we're going to post a credit of $3,600. 30th in your date column. $3,600 in the credit column. Again, the debit and the credit are the same. New balance is 0. Post reference is 4. And account number 633 on the journal. Insurance expense is next. We're going to post a $10,600 credit. 30th in your date column. $10,600 credit. That zeroes it out. And then we're going to put in our post reference 4 and account number 637 on the journal. Rent expense, we're going to post a credit of $16,200. So here's our rent expense, 30th in the date column, $16,200. Debits and credits zero out, so that's our balance. Again, make sure you indicate that on the normal balance side. Post reference 4 and account number 640 next to rent. Supplies expense, $8,100. 30th in your date column, credit of $8,100. Zeros out. Post reference is 4 and account number 652 next to supplies. Property tax, we're going to post a credit of $10,250. So just flip that page over. 30th in your date column, a credit of $10,250. That zeros out. Post reference 4 and account number 683. Repairs expense, credit for $4,700. 30th in your date column, $4,700 on the credit. Now this one we haven't used yet, so we want to add on debit, subtract on credit, keep that balance on the debit side. So we have our debit minus your credit, zeros out. Post reference is 4. So again, we hadn't used that one before, so we had to put the plus and minus on there. Repairs expense is $684. Alright, utilities expense is our last expense here, a $5,600 credit. 30th in your date column, $5,600 credit. That zeros out. Post reference is 4 and account number 690. Alright, so we've got the first two set here. Alright, so now we're going to go ahead and we're going to post the last 4. We'll go ahead and post the profit to the capital and close out the income summary at the same time. Okay, so with your income summary ledger here, go ahead and put the 30th as your date. Now, this is a debit of $77,550. So we're going to put this in our debit column. And the debit and credit are exactly the same amount, so that zeros out. And you always want to close this account. You should not have a balance in the income summary when all of your closing entries are done. Post reference is 4 and account number 901 on your journal. J Bond Capital, we're going to go to the capital ledger. That's at the bottom of wages payable. Alright, now for this one, go ahead and put the 30th as your date. Subtract on debit, add on credit, keep the balance on the credit side. Now, we have never done much with capital here except when the owner makes investments, and that's always been on the plus side. But here again, we're going to post the profit. Okay, so we'll post it on the credit side, $77,550. And then you will add those two credits together. We add those two credits together and you get $164,550. Sorry, $164,450. $164,450. Alright, then we put post references 4 and then account number 301 next to capital. So that posted the profit to the owner's capital. Now what we're going to do is we're going to subtract out what the owner withdrew from personal use from capital. So we go back to capital, 30th in your date column, post reference is 4, debit column put $12,000. Now we're going to take our $164,450 and subtract the $12,000 and we get $152,450. So again, this is the profit and then this is the drawing, closing out drawing. So $152,450. This account will stay open because of the fact that we don't close out capital. We want to keep this open during the duration of our company. So we're going to go ahead and we'll put 301 on the journal page. Last posting is drawing.
And so we'll flip that page over. We add on debit, subtract on credit, keep the balance on the debit side. 30th in your date column, we're going to post a $12,000 credit, and that will close that out. Post references 4 and account number 302 on the journal. Now again, make sure you have post reference numbers on your general journal here, okay? And then let's go ahead and go back through all of our ledgers so that we can look at these. So cash stays open, supplies is open, prepaid insurance is open, equipment is open. Accumulated depreciation stays open, as well as all of your liabilities, so accounts payable, interest payable, rent payable, wages payable, and property tax payable. Long-term note payable stays open as well. Capital stays open. Drawing, closed. Demo fees, our revenue account, closed. And all of your expenses, these first two are closed. Next page, all 4 of these from interest to supplies expense, closed. And then we have that very last page with our property tax closed, repairs and utilities closed, income summary we used, and then we close that as well. Alright, so again, permanent accounts, assets, liabilities stay open, as well as capital. Your revenue, expenses, drawing, and income summary will close. Now, the last step that we do in our work here before we get to our ratio, we got 4, 5, 6. We're going to prepare a post-closing trial balance. What this does is it makes sure that we just have those permanent accounts open, that we don't have any other accounts listed on there, and that our debits equal our credits. So again, if you will go to this page, the very last page of your demo, it says post-closing trial balance on it. We'll go ahead and we will fill this out. Now with your post-closing trial balance, again, what we're going to do is we're just going to list the accounts that are open. So this is part of our permanent documents, so no abbreviating. We're going to start with the name of the company, Crush Demolition Company. We use that specific date, April 30th and 2015. Okay, so again, all the balances or accounts that have balances on them. So we're going to start with cash, supplies, prepaid insurance, equipment, accumulated, and then just put DEPR-EQUIP. We have accounts payable next. Interest payable. Rent payable. Wages payable. Property tax payable. And our long-term note payable. So assets and liabilities, and then the last account that you should have on here is your capital. And this is going to be J bond, comma capital. And then we just put the balances from the ledgers on the debit or credit side depending on what their ending balance is. So again, with this, we'll start with our cash first. So that will be a debit, then our supplies debit,
prepaid insurance, debit, equipment, and so on. So whatever the ending balance is in the ledger, make sure that you do list that on its correct side. Okay, cash is a debit at $7,000, $7,900 for supplies, $2,000 for prepaid insurance, and $200,000 for equipment. Now your accumulated depreciation, that's going to go on the credit side, $21,000, $7,600 for the next one. These are all of our payables, so they are going to be on the credit side. $300 for interest, $3,000 for rent, $2,000 for wages, $550 for property tax, and $30,000 for our long-term note payable. Okay, capital again from that ledger. Again, the very ending number that you do get for capital, we're going to put down here. Again, when you're posting, please make sure that you do go through and balance out after each posting. Don't just, write 152,450. Make sure you put in the correct numbers line by line here. So 152,450 on the credit side. They already put the darkened lines down here on your paper for you, so we'll add up the debit. We get $216,900. Then we add up the credit side, we get $216,900. Double rule, it's already done for you, but you would double rule this post-closing trial balance. Totals does go on the left, that's already written there for you. So as you're going through your homework, make sure that you use this as an example. Don't forget to write totals and double rule that as well. And you can move the totals up underneath this one that I found. It just put it towards the bottom. Alright, so that is how we do that part of it. Now, one of the things that I have everybody do in the face-to-face class is I want you all to raise your right hand and put your palm towards the back of you, okay? And then bend your elbow and pat yourselves on the back. What you have just done and gone through is a whole accounting equation. You have learned to journalize. You have learned to post. We have prepared a worksheet. We have written up adjusting entries and posted those. We have also written up and posted our closing entries, and we have prepared our post-closing trial balance. So that is our whole accounting cycle. And from here, what we're going to be doing is just taking these basics that we have learned and just expanding them as we go. So, so be proud of yourselves that you've made it through all of this and that you have learned the whole accounting cycle at this point. Alright, the last thing that we're going to do is learn our fourth ratio, and that's what we call the current ratio. And the current ratio, I have gotta find my paper here again. You can put it on the same page here under number 8 if you want to, or there is room maybe under your totals here that you want to put that as well. I'll just write it down here. So here is our current ratio. Okay, now what we do here is we are going to use our balance sheet for this, and the balance sheet, we're just going to use our current numbers. So we use our current assets and our current liabilities number. So once we have completed our classified balance sheet for our current ratio, we're going to use our current assets and our current liabilities. So we don't use total, that's a different ratio. We use our current assets and our current liabilities. Okay, so here we're going to take our current assets and divide that by our current liabilities. And this is going to be again from our classified balance sheet. $16,900 is our current assets divided by our current liabilities of $23,450, and that's going to equal 0.72 decimal form, or you can leave it at 72%. Either way is fine. Either way you put it is fine. All right, so with our current ratio, this is assessing our company's ability to pay our debts in our near future, okay? Near future. If we remember back to chapter 2, when we did the ratio for chapter 2, when we learned our debt ratio, that was our total liabilities and our total assets. This is just our current. So that gave us an overall assessment of our company's risk. This just gives us assessing our ability to pay our debts in the near future using those current assets and current liabilities. So this is going to again give us that we've got 72 cents for every dollar to be able to pay our debt. So that's pretty good as well. All right, so the current ratio is also on page 139 of the textbook. So if you want to look that ratio up, you're more than welcome to do so. That is the chapter 4 demo. I know that this one takes a little bit more time, but again, you can pause it in between, as you're going through things, and take breaks in between and all of that. So that's the end of chapter 4. Go ahead and work on your homework. I just want to check one more thing. Sorry, I wanted to check one more thing before I sign off on this, because I wanted to check the serial problem for this chapter. And then for the serial problem, when you go ahead to do chapter 4 serial problem, you're going to start with the financial statements, and then you're going to record and post the closing entries, and then prepare a post-closing trial balance. So that doesn't have any transactions that have to be skipped or anything like that. So again, once you go to the serial problem, then this is on page 159 in the textbook, and then you'll just complete that as the directions say. All right, go ahead and get working on your homework.